Hello everyone, welcome back to another video of payback method. In the last video, we learned how to use the payback method and we have tried one of the example calculation. We end the video with a practice question, and in this video we are going to answer the practice question. In this example, we assume that for this project, the initial investment is going to be £310,000. Each year, it will cost £15,000 to repair the machine. Year 1 to year 5, we receive around £120,000 to £140,000 for each year. We are required to calculate for the payback period, and in addition we would like to compare whether machine A or machine B is a better investment. Now remember, for the payback method, it only calculates the time. So shorter is the payback period, then it is a better project. The payback period does not really calculating the profit. Okay, so let's jump into the example. As we can see from the question, in the first day, the initial investment is £310,000, and therefore the net cash flow is a negative 310. Remember, in accounting and finance, when you see a parenthesis, then that is representing a negative figure. In year 1, we have a revenue of $125,000. To calculate the net cash flow, we have to deduct it by $15,000, which gives us the year 1 net cash flow of £110,000. This £110,000 is apparently smaller than the £310,000 of initial investment, and therefore we have to have a look at the year 2 to see if we add up year 1 and year 2, is it going to be bigger than the initial investment. So for the year 2, the revenue is £127,000 and the expenses is £15,000. If we deduct the revenue by the expenses, we get a net cash flow of £112,000. So we add up the year 1 net cash flow plus the year 2 net cash flow, then this will give us £222,000. This is smaller than the initial investment of 310, therefore we have to try the year 3. In the year 3, we have a revenue of $140,000. We have to deduct the expenses of $15,000. Then this gives us a net cash flow of £125,000. If we add up this £125,000 in year 3 plus the £112,000 in year 2 plus the £110,000 in year 1, then this will give us a number of £347,000. Now this £347,000 is bigger than the initial investment of £310,000. In this case, we know that the payback method or the payback period should be somewhere between second to third year. Move on to next slides. Please remember the total net cash flow for the year 2 is $222,000. Okay, since we know the initial investment is £310,000, and a while ago we see that the total net cash flow of third year is bigger than 310. Therefore, we subtract this with the second year total cash flow, and this will give us a number of £88,000. That we know that we need 88 more thousand to reach the initial investment of 310, Therefore, this £88,000, we are going to divide this with the third year net cash flow, which is the £125,000. In this case, 88,000 divided by 125,000 will give us a number of 0.704. And we multiply this with 12 months, this will give us 8.448 months. Remember, the next step that we need to do is to round up this figure. So even though 8.448 is smaller than 8.5, we still round the number up. In this case, the conclusion will be the payback period is 2 years plus 9 months. Summary, I hope student now has better understanding about how to calculate the payback example. I hope you got a right answer, and I hope this example is able to help you to solidify your knowledge about the payback method. Once again, thank you so much for watching this video, and I will see you in next one.